So, you are a forex trader and you're still having hard time analyzing the forex markets and finding profitable setups. In this episode, I'm going to be showing you how you can find the best forex setups with a high reward with low risk and be able to take trades and have profits in the forex market. So if you're new around here, make sure to subscribe to this channel, turn on the notification bell so that you never miss out whenever I post a video. Let's go. To be able to do this, I'm going to be doing everything on my trading view. So if you don't have a trading view account or app on your phone, guys, make sure to download it. And also you can be able to access trading view on your PC by just going to the website, type in trading view, and you'll be able to have them. Then guys, we're going to be analyzing a few pairs and I'm going to be showing you how do you find setups. It's very easy to find setups on all these pairs. So let me show you some of the pairs that I'm going to be trading today. As you can see right here, we have Euro USD, we have AUD USD, we have gold, AUD CHF, AUD JPY, and GBP JPY. So these are the trades that we're going to be looking at today. And we're going to be, definitely guys, we're going to be using just support and resistance. This is the most used concept when it comes to trading in the forex market. This is the wide and most used concept, guys. I want you to watch this video carefully. Make sure to watch it from the start to the end. So, as you can see, guys, we have started with Euro USD. As you can see, this is our Euro USD. So, the first thing what you're always going to do, guys, is always go first to your daily time frame. The reason why you have to go to your daily time frame is to look out for the trend of the market. You want to see what trend do we have, and then you can mark out that trend. So as you can see, we have an uptrend market, as you can see, and then this market, the way we mark it out to see that it's a trend market, you come here and choose your trend line, and then you're going to draw it out. You're going to mark out like this. We are going to mark it out like this to show that this is our trend line, as you can see right there. So that's the first thing that we do. Okay, now since we know now it's a trend line, now we're going to be looking for major points that are acting as support and resistance in the forex market. Now here we are going to go to the smaller time frames. Let's go to the 4-hour time frames. Now here we go to the 4-hour time frame. We're going to be looking at points in the market that are now acting as our support and resistance, as you can see right here. So which points do you have that are acting as support and resistance? The first point up here is this one up here, right here. So what we're going to do is draw out. We're going to draw out a rectangle like this, as you can see. So this is the point where market is acting as support and resistance. Now this point that I've just marked out, it's a resistance zone. Since price fell to break here once and here twice, meaning that is a resistance zone. Then the other point is this point right here. This is another point right here. So we draw it out. This is another point right here. So this is another point right here. So this is a smaller one, as you can see right there. So I've drawn it out. Then I'll just push it a little bit down like this. You can see now this is our setup. This is our beautiful setup, as you can see. This is the 4-hour time frame. So the first thing you have to notice is we have a trend line, and we always want to trade according to the trend of the market. So what we have here, it's Euro USD, and market is in an uptrend. So we should only be looking for sells when it comes to market like this. So one of the where would you be looking for sells right now? This is the level where you'd be looking for sells. As you can see, price has touched this place here and also up here, as you can see right here. So this indicates that whenever price comes onto the trend line, it always bounces off and goes back to the upper side. So this is something that we're going to use right here. So we are going to wait for price to come. We're going to wait for price to come to this zone in here. So what we're going to be waiting for, we're going to either be waiting for a breakout and retest, and then we see price coming down, or we are going to see a bounce off. So when we see a bounce off, we are definitely going to take our trend. So if market bounces off from here, so we shall be doing this. So if market comes and bounces off from here, we shall be taking our trend, maybe putting our take profit around here, and then putting our stop loss just around here. This is on there, as you can see there. We will be risking 33 pips, but our target would be let's see the target. So our target will be 124 pips, which is very fair. If market bounces off there, because you can see the reason why I've made the stop loss very tight, because whenever price bounces off the trend line, as you can see, price doesn't like really cross down to take out anybody stop loss, as you can see right here and right here. And all the time that I've been in the forex market, I've seen this price never goes back to take out people's stop losses, mostly when it comes to trend line. So this is one trade if you're to be buying, but again, you have to go into the smaller time frames. With this, I'm just showing you how you can be able to find setups. So by the strategy we are using right here, it's called support and resistance. That is the strategy that we are using. Now let's say if price was supposed to go down. So if price was to go down, let's say if price breaks, so hopefully when price breaks, it's definitely going to come back and retest around this zone right here. So if price is to do that, then our entry would be right here. So here we would be going for short positions, probably around this level. So we'll put our stop loss around here, like this. Again, we always want to risk very few pips, and then one key zone is right down here, as you can see. So this would be another trade that we'll be taking if price breaks our trend line and retests, because right now we see something like a reversal on most of the pairs, because market has been in an uptrend for quite some time, and then we're now seeing price coming down. So this is what we'll be doing on the Euro USD. But again, you also have to consider the fundamental part of it, because this week we have so many fundamental news that are coming out. NFP, unemployment change in New Zealand, and all these things are coming out. Yeah. So this is our Euro USD. Now let's jump on to the next chart, guys. I'm also going to be doing another video showing you how these pairs have played out. So our next pair is AUD USD. So our next pair is AUD USD. As you can see, we have still an uptrend on this. We have an uptrend on AUD USD. Again, we always want to mark out the support and resistance zones so that we can know what is the price doing. So for this, we're going to come to the 1 hour time frame. We're going to be coming to the 1 hour time frame, as you can see right here. So when I come to the 1 hour time frame, you can see that the market is very clear on the 1 hour time frame. So I'm going to be doing my setups based off the 1 hour time frame. So this right here is a strong zone, as you can see right here. This is a strong zone right here. And also we shall drag this up here, and also this is a zone right here, in here, as you can see right here. So traders, this is a very simple setup. You see, we have support and resistance. Price failed to break the upper part. Now it has come to the downer part, so it has broken, and you can see a very big impulsive move to the downside. So here we're going to use a Fibonacci concept. So since we have now price has broken through, and maybe you're looking for sells, so here for us to look for sells, we are going to wait for price to come here to this zone here. We're going to wait for price to come back to this zone here and retest this zone right here at the box. So expect price to come back and retest here. So one of the best tools to use is now you apply the Fibonacci retracement. So a Fibonacci is always we use it whenever we have retracements in the market. So the types of retracement, the type of retracement that I want to show you is this one right here. So this is an impulsive move, as you can see, this big impulsive move, this right here. So this is our impulsive move, this, you see. Then this is a retracement. So we want to know how far the retracement will go, so that the market can continue to go back down. Since we have now, price breaking our support level, so that support level is going to definitely become resistance. So what we're going to do is apply the Fibonacci retracement. And how do you apply the Fibonacci retracement? When you apply the Fibonacci retracement, you apply it from the swing high to the swing low on a downtrend market. So this is our Fibonacci retracement. Try it here, tap it, and then apply it from this zone up here to down here, as you can see right there. Perfect. So I'm going to mark out with a blue line and show you what levels do you look out for you to take your trades when you're in the market. What levels do you look out for? So this is the level that you look out for, the 50% level right here. So now I'm going to remove my Fibonacci so that you can see where I expect price to come out. Let's do like this. I'll use trend lines. So price has come from here to here. Now it is headed here to this, and then we are going to see a drop. So this is what we expect. This is what we expect, traders. So now I'm going to remove my Fibonacci retracement so that you can see what I'm trying to mean. So when I remove my Fibonacci, as you can see, everything is just perfect, guys. This is pure price action. You don't need to apply, smart money concepts and all that. All you have to do is wait for price to come to your zone. Traders, you need to wait for price to come to your zone. Let's go back to Euro USD. As you see Euro USD, you see Euro USD, it has already come back to the upper zone here that I drew out. So you always want to wait for price to come to your zone. So some can take trades right here, but it's always good to wait for price to come to your zone, So me, I would have taken trade because this was my zone. But now for you as a trader that is watching me, you can either decide to wait for price to come to your trend line. So our trend line is now our zone. It's our point of interest. So this is the same thing with this AUD USD. It's the same thing with this AUD USD. So let me zoom in and you see. So these black lines that I've drawn here, I've showed you how price has been moving and where do I expect price to come to. So my area of interest, as you can see, I drew out this support level which was broken. Now it's going out as a resistance. This is where now I expect price to come to. So you wait for price to come to you. Don't chase price. Don't try to chase price, guys. Let price come to you. So when price comes to you here, what you're going to do is definitely, and guys, in more upcoming videos, I'm going to be showing you where you can see everyone is putting their stop loss. I'll be showing you that. So traders, now since we are looking for shorts, so let's wait for price to come back to this zone right here. Let's risk, just 30 pips, and then let our target be a double. Let our target be a double. I always want to target 100 and plus pips. So if you're waiting for price to come to you guys, this is the trade. This is how you have to take the trade. Wait for price to come to you, because remember the retracement. One thing you should know that this is an impulsive move, and then now retracement has to come in. Whenever we have impulsive moves, retracements have to come in, and always an impulsive move comes either when you're in a downtrend or uptrend. Now you can see right here we have something like a downtrend market. Price is trying to reverse because it has been in as you can see, it has been an uptrend this side, then it consolidated right here, and now it's dropping to the downside. So literally it's doing what was outside. So this is AUD USD traders. Again, as you can see, we're only risking 30 pips, we're not risking more than 30 pips. Our risk is very, very small. So now let's head on to the next pair, GBP JPY. So we have GBP JPY right here, traders. We have GBP JPY. So as you can see, traders, the first thing, you can first check what is the trend of the market so that you know what you are dealing with. So now we go to the daily time frame and see what are we dealing with. Is it the trend, an uptrend or a downtrend? So as you can see, the market that we have on the daily time frame, it's more of a downtrend market. It's more of a downtrend market, though it's also like a consolidation, as you can see, because price is just in a fixed zone. So what we are going to do is mark out now our support and resistance levels on the 4-hour time frame. Let's check the 4-hour time frame and see how does it look like. Perfect. As you can see, traders, this is our market. This is how our market looks like. As you can see right here, this is how our market looks like. So what we're going to do is mark out, as you can see. Now this level right here, up here, it's acting as a resistance level. So you come here, choose your rectangle right here. You choose your rectangle like this. Then you're going to mark out this level right here, as you can see. Then we mark out the level down also, like this. So traders, now what we have marked out, as you can see, this was a naked chart. There was no analysis. Now I'm applying analysis. I'm giving this chart live. So how do you trade a type of setup like this? So whenever I see whenever I see such types of setups, what comes to my mind is demand and supply. What comes to my mind is smart money. I know now these are banks that are in the market. Remember, I did a video once and I told you which setups you should always look out for, and these are banks that are in the market. So I'll give you an example right here. As you can see, this V-shaped structure here, this V-shaped structure here, even here, even up there. These are banks that move markets like this, So one thing you should always just look out for is demand and supply. So up here, this is a supply zone right here. This is a supply zone right here. Let's actually extend this line. Let's extend this line to this side here. So this is our supply zone right here. So as you can see, price came back to this zone, fell back here. So now here you wait we just wait for price to come to your zone. Your zone is this zone and this zone here, this zone, and then this zone down here. So now again, what do we have here? So here we have price again coming back to this zone here and come down. Again, we have price coming back here the second time. I mean, this is now like the fourth time price comes back here and goes down. So let's see if we are taking trades. Let's see if we are taking trades. How much would we be making? Mostly on these last trades here, since these last trades didn't come up to down here. But let's see how much would we be making. Is this from here? So our target, let's say price reached here, and then we're only risking just that. Traders, as you can see, so here we would be risking 50 pips, and our target would be let's see how many are these. So our target would be 214 pips. Traders, this is crazy. We would be risking 50 pips to make 214 pips. Again, you can see, traders, with all these setups that I'm showing you, whenever you wait for price to come to your zone, price is not going to take you out in a stop loss. Because waiting for price to come down up here, it takes a lot of patience. But most of the traders just want to gamble in. They want to take trades where they see price is right now. So if you're taking trade here, this is probably like 400 and plus pips. If you're taking trade here, trying to buy, so a type of setup like this is where you're going to be buying and selling at the same time. For prices on the supply zone, you sell. If prices on demand zone, you buy. But again, if you're just using proper, support and resistance, so as you can see, price fails to break here, you take your trade. Price fails to break here, you take your trade. So I'll show you why you would take your trade here. So remember, we have reversal candles, traders. We have reversal candle. Look at this candle here. This is a bearish pin bar right here. This is a bearish pin bar that most of you call shooting star. Then look at what we have here. We have tweezer bottoms. We have tweezer bottoms right here. Again, look here. We have a spinning top right here. We have a spinning top there. Again, what do we have here? Traders, I want you to look. Traders, I want you to look. What do we have right here? We have an engulfing candle, a bearish engulfing candle right here. Again, we have another bearish engulfing candle right here. So literally, you would be taking trade with confirmations. The first confirmation you have, that is a support resistance level. Price can't break through there. Again, you look out for candle that show reversal. So as you can see, this is a reversal. Traders, if you're a beginner trader, use these concepts and try as much as you can to stay profitable off this. This is a profitable strategy, but you apply it for some time. Don't think that just because I've showed you here, this is how things are going to be easier for you when you're trading on your charts. That's not how things work, traders. So I want you to apply these strategies, practice them as much as you can. Just make sure that whenever you are analyzing, make sure you are looking out for high reward. So don't look for these setups on every market. Where markets that don't look like this, leave them. Don't apply your strategy. Don't force your way in. So this is our GBP JPY. So we're going to look for one more pair. We're going to look at one more pair. Let's see. We're going to be looking at one more pair. So this is AUD CHF traders. AUD CHF again, we see impulsive moves, we see retracements. So what we do here, we're going to mark out our resistance zone here, right here. As you can see, even that's where the current price is. You can see price is currently there at this zone right here. You can see price is currently at my zone right here. As you can see right there, price is currently at my zone. So we're expecting breakout on the retest. But one of the confirmations that I always want here, when price is at a zone like this, as you can see this candle here, it came down here and closed from up here. So if this current candle that is open right now, if it closes from above here, we are likely to see price shooting back to the upper side. And the reason for that is, even when I apply my Fibonacci retracement like this would be another confirmation right here. So if price exceeds this level and comes and breaks my 50 level, it means we may see price going to the downside. But if we don't see that, it means we may see price bouncing off there and going up to the upper side. But again, wait for price to come to your zone. Now my important zone here is 50% level. If price breaks 50% zone, I'm definitely going to be looking for sells. But if price just bounces off the 50 level, I'm going to be looking for buys. This is the AUD CHF. But when I'm trading the AUD CHF, I also like to look at the AUD USD. You should always have two scenarios, but even though you have the buy scenario on that you're looking for, you should also look at the sells. So this is AUD CHF. This is how it looks like. So we can apply even more, more analysis. We can apply a trend line right here. We can apply a trend line. Why not? you can apply a trend line right here. And then, you know, when the more analysis you apply, you know, the more picture that you get where market is probably headed to. So now this is what we have. Now you can see if price breaks, you can see a zone where price is going to definitely come to. Price is definitely going to come to this zone here. And again, I showed you on the Euro USD, whenever price comes back to the trend line, it always bounces off. So here you have very many scenarios on how you can be able to take your trade. But one of the trades that I will be taking is this trade right here, when price comes back and bounces off my trend line, because trend lines are major. I'm only going to be looking for a bounce off or a reversal. I'm only going to be looking for a bounce off or a breakout and retests. So that's how I would be trading the AUD CHF. So traders, that is how it's easy for you to analyze the forex market. Trading the forex market, it's all about experience. The more you analyze these charts, the days and days that go in sweat and blood that you go through, traders, these things are always going to pay out for you. But I'll say one more thing. Always wait for price to come to you and always trade with the trend of the market. And use the simplest strategy, which is support and resistance, and also breakouts and retests. Use only that, practice it for some time. You'll be a profitable trader. But if you're a trader who's going to be mixing up indicators, blah blah blah, you're never going to be able to succeed in the forex market. So guys, if you have enjoyed this video, make sure to subscribe to this channel, turn on the notification bell so that you never miss out whenever we post a video, and I'll see you in my next video. Peace.